pleased to be here with you with some titans of digitizing financial services for greater access. This is a really exciting panel to have a look into how we increase access to financial services. So you've heard too much from me over the last day and a half. I'm going to let these folks introduce themselves. So we'll start here just to my right. Introduce yourself and also tell us a little bit about your company.
Hello, everyone.
Or your city, in fact.
I'm Shiv Chatterjee. I'm one of the co-founders of DMI Finance, which is a digital lender in India and focuses on consumer credit, corporate credit, and venture capital.
Hi, everyone. I'm Abhimanyu Munjal. I'm the CEO of Hero FinCorp. We are another lender in India. We're an NBFC. We finance wheels to walls. And our mission is to provide upward mobility to every Indian, to empower every Indian for its upward mobility.
Hello, everyone. I'm Dipesh Shah, part of the International Financial Services Center, which is coming up as a new fintech city in India. And I'm leading the development efforts at the International Financial Services Center.
Hi, I'm Sohail. I'm the CEO of BharatPe. We are India's largest business-to-business payments company, and on the back of that, we also, like a lot of people in the room, do digital lending to small businesses.
So we've got a lot to talk about, but let's start off, first of all, with DMI Finance. And let's talk a little bit about what you do. A non-bank finance company. Why do you make that particular distinction?
So that's just
from a neobank. Is that what you don't want to be called?
That is definitely, we do not want to be called a neobank because a non-bank finance company is a regulatory distinction. A neobank is a fad term of the day. Mm-hmm. So we don't want to identify ourselves with whatever is the trending keyword in our industry. Non-bank finance company is what we are by definition under the regulations. And what we are focused on is in providing finance as seamlessly as we can to a large number of people who otherwise may or may not have access to traditional financing channels.
They still need a bank account, right?
They absolutely need a bank account.
Okay, so through UPI they've got that, but then what?
Then they apply for a loan, typically for either consumption purposes or for a personal loan, which would be kind of undefined end use. Mm-hmm. And they do it through digital channels. When I say digital channels, I mean that the application for the loan comes to us via what is a buzzword of the day, API, mm-hmm. from one of our partners. And we basically credit decision that application in somewhere between 15 and 25 seconds. And we disperse the loan in somewhere between 30 minutes to 2 hours.
And what's the impact you've had?
I think the impact we've had is in providing finance to a large number of people who in India go under the term of new to credit. Mm-hmm. New to credit means that these are people who have not been able to take a traditional loan before from a lending institution, whether it's a bank or a non-bank finance company. They are new to credit. They do not have a credit footprint with the credit bureaus. And traditionally, underwriting of an individual has relied heavily on credit bureaus. Mm. So if you don't have a credit bureau footprint, then it is very hard in India typically to get a loan. So our focus area are people who are new to credit, and roughly half of the loans that we make go to people who are new to credit and do not have a credit.
And it's small businesses, is that right?
These are largely individuals.
Individuals, but
yes.
who are trying to finance their business mostly, or is it do you get equally business and?
So some of them are trying to finance their business. Some of them are trying to buy a smartphone or a computer. Mm-hmm. So it is a consumption loan, a consumer durable loan in that sense. Some people are simply taking a personal loan in order to pay for what may be an unforeseen expense. Mm-hmm. It may be a wedding or a vacation or a healthcare emergency that they're paying for.
All right, great. Abhimanyu, tell us about Hero FinCorp. How is what you do different? Are you guys competitors? Friendly competitors?
Friendly competitors.
Okay, yeah. All right. Tell us about your business.
Yeah, so we are slightly different than what he does. We focus on the same kind of clientele. We have about, in the last 10 years, acquired about 7.5 to 10 million customers. 80% of those were actually first-time credit borrowers, and maybe 50% of those were never had bank accounts. The real difference between us and him is that we are a phygital company, so we are available in about 2,500 locations in the country in India, 22,000 pin codes out of 26,000 pin codes, where we have a shop in a shop. And we do much smaller ticket loan, and our starting point is two-wheelers. So I believe that when a customer is coming, when the Indian is coming to buy a two-wheeler, he is very young in the financial age, not biological age, but when it comes to financial history, because that's the first loan or the first access to financial services that they get is through a two-wheeler. So that's our acquisition engine. We acquire customers there, and we actually want to live through the life cycle. So we try and cater to them as they trade up. They want to buy a used car, they want to buy a home, any unforeseen expenses. So we actually acquire them as a two-wheeler loan customer and then take them up all the way till they become...
How much of financial education is a part of what you do? Because I know that that's an incredibly important thing as you bring people into the system in which they have access to credit. It's also important to make sure that they don't take too much advantage at a time when maybe they could.
So, it's a very good point that you make. We actually call ourselves a socially responsible lender, right? In every way and form. It's not only about education, but it's also about capping how much you charge, right? I know there are lenders out there who are charging absurd amounts of interest, which the guy is a daily wage earner, right? And he can barely pay for his bread and butter, and he's just paying his debt throughout. So we call ourselves a socially responsible lender, and in fact, as a part of our CSR, we do a lot of financial education camps across villages in the country. And we've touched about over 300 or 400,000 Indians pre-COVID. Physically, we had a cartoon van go into villages and really tell them about what a bureau is, what paying on time is, what a bank account is, and really teaching them through animated cartoon on financial education, which was a big success. But during COVID, of course, things had to wind down, and we've started that again.
Interesting.
Yeah.
I'm going to come back to the IFSCI in a moment. Let's stick with this sort of more personal consumer idea. Let's talk about BharatPe. Tell us a little bit about what you do, especially with the small shops.
Yeah. So I think BharatPe was started only 4 years back, and by that time, what we hear a lot now, UPI, the peer-to-peer transfer, money transfer network was already big. I think there was something weird happening in the market at that point of time. UPI for peer-to-peer transfers, which is me transferring ADU money, was already big, but me using it at a shopkeeper was very, very small. And as we went sort of deeper into it, it was very obvious on why that was happening, because everyone who was doing UPI was a consumer-focused company, and they had to make money somewhere, so they were charging the merchant interchange on the transaction, very similar to what a credit card charges a shopkeeper, right? So, and it was weird because it was exact same architecture, it was exact same transaction, right? So, and that's when we thought if we launch a UPI focused on the shopkeeper and make it free, it's going to fly. Of course, it's going to fly, but where will you make money, right? So that was the sort of thought process of the business. And what is very obvious here that there are a lot of lenders in India. I think for the right reason. India is a heavily credit crunched market, and banks don't necessarily do a great job because of just the demographics of the country to catering to sort of the last mile, right? So we said if we do payments for free, that gives us proprietary data, because we heard the term NTC. 90% of the shopkeepers are by design NTC. They only handle cash. They hardly pay income tax because of that. That's all great for them till that point of time, but that means they don't have any history of proving they are profitable, right? So no bank will give them credit ever.
It's also not quite as safe, is it, to be only cash, right? I mean, it's a different idea between
Yeah,
digital and cash.
but if you tell a shopkeeper in India, it's and like it's very obvious why cash works in India, right? This is not developed part of the world where a shopkeeper makes 30% margin. He'll happily pay you 2 to 3% for enabling a transaction. Shopkeeper in India makes 15%, 12%.
Okay.
If you are going to tell him, I will charge you 2% to give your money into your bank account 2 days later, he will say, what's wrong with cash? It's as simple as that, right? So cash is never going to be out of the economy, and therefore the government thrust on UPI, reducing the interchange charges on cards, and that's all sort of playing to that, right? So we said, let's do transactions for me free and do credit on the back of that. And it's worked wonderfully because not only do you get real data around what the guy is sort of taking into his bank account, but you are able to use the same architecture to collect money back when it is due, right? So in India especially, a lot of people give a lot of thrust on underwriting a consumer for a loan. That's actually important, but not the most critical. Most critical is how do you collect, right? So, and that's what the UPI infrastructure allows us to do, right? So, 96% of our money comes back on its own. Consumer comes to a shop, pays on the QR code. Our collection comes from there, right? And the remaining 4%, 5% is the money which sort of like a conventional lender we have to go after.
Interesting. Let's, we're going to come back to you, but let's talk about IFSCA because you're doing something different. It's helping international businesses enter into India in order to invest, create businesses. It's a new authority. Gift City is a free zone, so the government's given a 10-year tax holiday. And I think you've got about 300 entities there with a lot of room to grow. Is that right? Tell us some of the things you're most proud of that people here may not know about.
I think it's important that people should understand that now India is a separate platform for the global investors to come in, as you just said. The International Financial Services Center, which has been created, many times India has been known for creating financial centers outside. So for example, if you remove India business from Singapore, or if you remove India business from Dubai, you suddenly find drop in the overall volume of business that they do for India. What was happening was the Indian businesses were given much more efficient platforms in the neighboring centers, and our own business and jobs were being getting transferred to those financial centers. What government has very smartly done is that they created a International Financial Services Center as an offshore zone within India, which means that from an RBI or from a local law perspective, you are a resident outside India when you operate from that zone. You are on par as far as the taxes are concerned, as the way that you operate from Singapore, Dubai or any other financial centers, you get the same tax parity. Most importantly, it is working right in the center which has a high demand for international financial services next door. So for example, the Government of India's report in 2015 was that if India don't create a financial center of its own, every year by 2025, $120 billion of international financial services will be imported into India through the other financial centers outside. What has been now done is that to give that a structure in the form of a banking, insurance, capital market, funds, even the platforms like what's been told here in a fintech platform, like an international trade financial services platform. So UK firm financing an SME or for his business is now made possible through an ITFS platform created in Gift City, which was never been earlier possible because the capital account is not convertible into India. And when it came to the transactions, it were more complications from the regulation and tax perspective. And that's why this 10-year tax holiday, which you just said, gives them the sufficient structure to bring in the business onshore India rather than doing it from the financial centers outside India.
I want to ask you a specific question around climate finance and financing for the clean tech revolution, because we know that there's a financing gap of about $4 trillion a year needed in order to meet the Sustainable Development Goals. If you took climate finance alone, India is incredibly important. We know the money needs to and must move from the west to the east, however you want to put it, richer worlds to the less well-off. but it has to move into India. Modi has incredibly ambitious plans. We quite often speak to clean tech companies from India. Tell me how what you're doing enables that, that transition.
Oh, I think what's important is that if India has to finance this, what we understand is maximum 30 to 40% that the India will be able to manage within its own zone. So rest 60 or 70% has to come from outside to finance the requirements. And what you need for a climate finance or sustainable finance is a regulatory platform which is outside the purview of so many applicable domestic law which gets applicable when you are operating the structure onshore India. So what this center does is that you are able to bring in a financial structure in an IFFC which is similar to structuring it in London or in any other place outside. From a regulation perspective, there is a unified regulator which is having powers of all RBI, SEBI, insurance regulator, pension regulator into one. So you have a unified regulator giving them the comfort of the money coming in. And at the same time, the foreign money going back, the climate finance money coming in and going outside country is also made quite easy because it's an offshore to offshore transactions. You're not touching the domestic zone for your transactions in terms of your structuring. This is, we believe that we already structured $45 billion of green bonds on our platform. 7 billion is already listed on the International Financial Services Exchanges operating there. And close to $200 billion of banking transactions have already happened from that zone, which includes a lot of green and sustainable financing from that platform for India.
Okay, interesting. Shiv, let's come back to you. I wonder if you can talk a little bit about, the government has been very supportive. We've seen a lot of initiatives. From a policy perspective now, what do you need? What do you want?
So, I mean, there's a wide range of policies that we can talking about here. I'm going to interpret your question to mean how can the government support digitalization of finance? And in that, I think one of the key areas is going to be basically being as transparent and clear about the ground rules. So one of the issues that the industry has faced in recent times is volatility of regulation. And by volatility of regulation, I mean that certain practices emerge in the fintech industry.
Like what?
I'm just saying that let's assume that
Okay.
there's a regulatory landscape, and within that regulatory landscape, there are things that are clearly allowed, and then there are things that are clearly not allowed. And typically, the role of the regulator is to allow for innovation without having that innovation test the boundaries of systemic risk. Now, that means that by definition, there is a certain element of lack of clarity in terms of what is permitted. And so the innovation happens in those areas where there is room for interpretation, room for regulatory interpretation. Now, those areas have grown very dramatically in India over the last few years. So for instance, there has been a fairly significant move to provide financing to the bottom of the pyramid. And I don't mean quite the bottom of the economic pyramid, but certainly the entry level population, the millennials, the 20-somethings who are going into the workforce. And that provision of credit has taken a wide variety of forms. They have come in through lines of credit, they've come in through personal loans, they've come in through what got labeled in the market as challenger credit cards or neobanks or however you want to call it. And in the absence of regulatory guidance, these practices grow and grow and grow until they become significant, and there's a large amount of money, whether it is venture capital money or private equity money, that comes in. And then the regulator feels that, okay, now we are at a point where this needs to be addressed, right? So I think from the industry's perspective, it would be much more productive if there was ongoing dialogue between the regulator and the industry, so that these practices which are antithetical to how the regulator views the market, those practices can be nipped in the bud right at the beginning, rather than wait for them to become significant.
Suhail, I've seen you nodding over there. Would you agree was that something you'd like to see more from the government?
No, I think I've always taken the stance that RBI in general, at least in India, does a good job of balancing innovation and sort of putting the guardrails out there. I think I think the role of the regulator, as rightly said, is to foster innovation and to start managing that innovation when that becomes systematic, right? So if there is systematic risk introduced by some of the practices which have, or some of the innovations which have sort of brewed at the corner of what is allowed or not allowed, I think they need to be sort of checked, or they need to be sort of rethought. I think, but I do agree with sort of the point on this can't, many times this seems, and I'm sure it's a lot more thoughtful than what we are seeing it as, but as an industry player, it seems like it's a decision taken last night, right? So, because there is no conversation, continuous dialogue around it, and I think like in general, I believe like 9 out of 10 decisions the regulator takes are right. It's not about the quality of the decision, it's about sort of being part of the decision making and sort of being able to influence, being able to sort of get to the right answer.
Are you canvassed for your opinion?
No, so I think I would happily, right? So I'm anyway outspoken. I think we are known to be, fintechs are generally known to be outspoken. Right. So we would happily sort of talk what we think is right, and we will sort of all happily go with what is the decision eventually, right? So because none of these decisions is make or break, right?
Yeah.
It just means you have to rethink your full tech construct, right? Which takes a lot of time.
Yeah.
And if there is dialogue, then people can be aware a lot earlier, and then they can sort of change strategy over a much longer period of time versus having to do knee-jerk stuff, right? So, and sometimes it works in our favor, sometimes it works against us, right? So it's not sort of personal.
Abhimanyu, I can't believe it. We're running out of time, but I want to hear from you a little bit about how you might reimagine the UK-India relationship, especially when it comes to this issue around financial services. What would you like from the UK? What would you like from partners in the UK more of?
So I think there's a huge untapped opportunity between UK and India, and I would put three points there. One would be capital, both equity and debt. You know, UK has a couple of stock exchanges. We can have more listings here, and vice versa. And we can have a lot of private equities and foreign banks actually give capital and debt capital to India. Second would be academia. Right, UK is a place with a lot of academia, where a lot of research of cutting edge stuff, innovation is happening. So how can we leverage? How can the Indian fintechs actually leverage that? You know, bring them to the Oxfords or any other academia here to really come and learn, and you know, vice versa. And third is really there's a lot of exciting fintech stuff which is happening in the UK, whether it's neobank. I know. Some of my families don't want to be neobanks. Not that I want to be, but I think UK is leading a lot of these fintech innovations.
Yep.
So really create a bridge to say, can we have a fintech track between UK and India to focus not on the top two, but just on innovation, on making financial services more inclusive across the globe.
Fantastic. I can't bear it. We've run out of time, but thank you very much, gentlemen, for being part of this. We look forward to continuing the conversation. We'll be back in just a moment. My colleague, friend Mark Barton will be here with another session in our Reimagine series, Reskilling for the 21st Century. Stay with us.